네, 안녕하세요. 웰스 밀레니얼 피터입니다. Hello, this is Peter from Wealth Millennials. Today I'll be covering our options 101. Um, so the way that I do day trading is a little bit different from what you know, especially when it comes down to um, what the fundamentals of the stock. So let me explain how I choose the stocks to do the day trading and also explain a little bit elaborate a little bit about how we're going to proceed with the options trading. So this is how I choose the stocks. In the beginning, every day during the week, a market opens. I go to markets and I click on market movers and choose the one with the most active stocks with the most volume. Here we have 120 volumes for Mustang Bio Incorporated and Life Science, so on. NVIDIA is also one of them. Yeah. So that's NASDAQ. I go to New York Stock Exchange. The most active one is Semiconductor Bull 3X shares, GameStop, um, the Bear, AMC, TSM. I'll go to NASDAQ. So I will choose this one. And I'm going to put this in here. To show. So day candles. And put 1 day, uh, 1 minute. Okay. Now let me share the link. Okay, it's not the use. Going to share this on the WhatsApp group. Okay, so I have three stocks open. One is MBIO, and the second one is GME, and the third one is Netflix. Now, the reason why I chose these three stocks was because when I choose the market and click on the volume and how much volume it has, this is a small cap. Netflix is also a large cap, so it moves a lot. Recently, if I go to Netflix, if you look at Netflix, it's been going up steadily. So 1 week ago, it was a $640, and now it's $670. And as you can see, it tried to break something on top here. I think it was 690-ish. They tried to break it 2 times, and then now it's falling. There is a high chance. So when I look at the charts, there is always all the stocks always have ups and downs and ups and downs. The way I see from day trading is that I don't care about the fundamental value of the stock. All I care about is timing how the stocks go up, down, up, down. Like for example, if you look at the candles here, the green means it's going up, red means it's getting sold. The same here. Whenever the stock has ups, it has downs. Whenever it has ups, it has downs. Same here. Ups, downs, ups, downs, ups, downs. My goal is to catch the most successful trade, maybe one or two, or even multiple times throughout the day, on how they move and um, finding the range on how much it can go up and how much it will go down. I create an account, so I move some money here so that I have $20,000 that I can play around with. This is a margin account, meaning with Canadian dollars, I can borrow USD and I can invest either in the Canadian market on the US or the US market without really paying the exchange fees. Okay. Before I start to trade, let me explain briefly on what is an option. So, what is an option? Options are derivatives of stocks. What is what options? So what that means is by trading options, you're not really trading stocks, but you're trading something related to stocks. There are two kinds of options. One is call, the other one is put. You probably heard of things like, oh, whenever there are a lot of calls, um, the the stock prices will go up. There are a lot of puts, the stock prices will go down, da 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 da. Whilst it might be true, it's not always the case because options are um, related byproducts of stocks. The way that it works is that um, people can buy calls, people can buy puts, but one option, either call or put, is equivalent to contract to buy or sell 100 underlying stocks. What that means is if you purchase one contract of an option, let's say one contract of call option, you are buying the contract to buy 100 stocks at the strike price. So when I click on options, I'm going to do Netflix. So if I look at Netflix, for example, it has this option expiries, open interest, da 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 da. So right now, we have more puts, so 700 strike price, open interest 5,000. So more puts than more more calls. Sorry. So this is the call. So more calls at 700 than puts. Now, from here, we can say, I'm just going to copy one of the most popular ones. Uh, 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 So if I look at this is how the option is written. It's implying that until June 21st, 2024, so this is until June June 21st, 2024, you have the right to purchase Netflix 100 shares at 700. Now we go back to Netflix. Go back to Netflix, okay? If we go back to Netflix, right now the stock price is 668 as of June 17th, 9:42 a.m. The current Netflix stock price is 667.94. The call option price is, so now we go back to how much the price was. Bid is 1.1, 1.1, ask is 1.2. So roughly around 1.15. So premium, so total purchase price will be 700 plus 1.15. So 1.15. If the contract, if you were to exercise. Okay. So right now, the share price is at 667.94. And we have the right to purchase, if we're to buy this call, we have the right to purchase 700. So total purchase, and then option price, which is the premium, option premium price is 1.15. That means by getting into this contract, by purchasing this contract, your contract to purchase this 100 stocks of Netflix will be 701 until June 21st, 2024. So, how do we make or lose money? Okay, if you look at how the option contracts are constructed, the call option premium is, let's say, 1.15. So you can buy the call option for 1.15 per share. It's not per contract, it's per share for each contract. Meaning you only spend one 115. Let me show you. So if I were to buy this, now it's $1. So if I were to buy this stock option, Netflix US site, expired June 21st, strike, let's say 700, call Buy to close. Oh, this is margin short account. Uh, okay, something's not right. Oh, what's going on? Some technical glitch. Oh, okay, there's something wrong with my software. What I'll show you is this. Give me one moment. So, so far to choose Netflix. Expired June 21st. Expired June 21st. 700. 700 strike price is now roughly about 90 cents. So it was $1.15 for, I don't know, like about 5 to 10 minutes ago, but now it's 90 cents. How it works is that if I were to buy, if I were to buy one contract at 90 cents, it's going to show me $101. So you're technically getting into a contract to buy 100 shares at $700 for only 100 USD. So that means, which is 1.15 multiplied by 100 plus, they call it commission. The the price to buy here. The commission is 11.24. It's different from every brokerage, so I'm going to write commissions. Okay. So technically, you can bet that Netflix will reach $700 or higher by June 21st at only 115 USD. So what happens if the price goes over 700 before the strike date, option expiry date? So what happens if the price goes over $700 before the option expiry date? Now, remember, this is a contract to buy the stock, contract to buy an arrangement to buy 100 shares at $700. So let's say, assume the stock price, I don't know, $800, 801.15 um, on June 21st. It doesn't have to be June 21st. Let's say 19th. Okay. So what happens if the stock price goes over 700? Then how you calculate is 801.15 minus 700, oh, 701.15 because you paid $1.15 for the option premium, right? So each stock is calculated as 801.15 minus 701.15 multiply by 100. So 801.15 minus 701.15 multiplied by 100. So you will make $10,000. Remember, you only spent $115, but if the stock goes to $800, then you will make $10,000. This is the trade-off of paying the option premium and actually making money. If it goes the other way, it goes over below, then you have two choices. Either you pay extra money to exercise a stock, to buy the stocks at $700, or you can simply just give up the option contract, which we say the option will expire worthless. Okay, so your maximum loss is 115 plus commission. Okay, so if you use options to your advantage, because let's say, for example, right now, I see some patterns here. This one, this is very volatile because it just lost. It went from 40 cents to 30 cents in less than 20 minutes. So that's 25% down. So this stock went down 25% in 20 minutes. So this is very volatile. GME, it started from 28 point whatever, and now it's still 28 point something, but it's still very volatile because it went up and down by almost, I think, 5 or 6%. If I look at Netflix, this is the chart that I like because it's showing a lot of ups and downs in a very short period of time. So with it down, up, down, up in 20 minutes. That means we had an opportunity to buy puts here, call here, put here, call here, put here, call here, put here, call here. So now I'm going to wait until this price comes down, okay, and try to get into option. And also one thing to note is that in here we have the size of the candles. So big green means a lot of people are buying. Big red means a lot of people are selling. In here, I see more big reds than greens. Yeah, yes, the red is bigger. So in this case, what I'll do is if it goes up, I'll try to sell. I'll try to buy puts because there are more selling pressure from the chart that I see. Okay, so I'm going to enter I'm going to find an entry position to possibly trade options and show you how money is made or how money is lost. Okay, now I'm going to trade Netflix options. Mm, Actually, the price action, the movement is only $5. I'm going to trade the GME options. Price action, this one goes up and down 5%. but this one only moved like 1% each. Unless I want to enter long expiry, or I can enter this MBIO, but I doubt it will have any options. MBIO. Yeah, it doesn't have options. So this is a small cap. It doesn't have options. You can only trade stocks. So now I want to find the perfect entry position. How do I do that? Well, you see the waves, right? It's up, down, up, down, down, up, down, up, down, up. So what I do instinctively is very simple. There is a point when it starts to come down. There's a point when it starts to go up. In this case, in Netflix case, it's trying to hold 666. It doesn't go below this, but it also has a limit to how much it can go up, which is roughly about 668. So it's moving in the range of 666 and 668. Eventually, it will start to move at one direction, but today, I'm assuming that it's going to go because there's a lot of selling pressure. It's going to go down. That's just my assumption. Um, but at the same time, we have to watch and see where it's going to crack into. Okay. In here, there's a pattern. I think everybody can see the pattern. It was going down, now it's going up. Um, and at one point, it will start to go down again, and then it'll start to go up again. Our job is to identify those patterns and actually trade based on the patterns. Now, it's okay to lose money because what we want to do is we want to make sure that we don't have to make money on every single trade. So I see the stock market as a war. You don't have to win every single battle to make money, but you just need to win the war to make money. So that's how I see. So you can make series of investments, series of bets or buying options, but at the same time, you don't have to make money at all times. If you lose money, you lose money. It's okay. You have more, like a lot of chances coming in. And here, there are a lot of selling pressure, a lot of selling pressure. So this stock is better to sell on every pop. So every time it goes up, it's better to sell. In here, it's also GME is also going down. This is lower highs, lower lows. So for GME, it's better to sell at every pop as well. Netflix now, it got the floor at 666 and it's got the top here. But the movement itself is too tight. It's only $2 movement. That's really nothing. So what I'll do is, since we're going to trade options today, I'm going to change this ticker to something a little bit more exciting. Mm, movement, not the cheap ones, but something way more expensive. How about Tesla? Uh, How about Tesla? Okay, Tesla is in upper trend. You can clearly see it's going up and up. The floor is actually here. So what I'll do now is I'm going to enter Tesla. Okay, in June 21st, and I'm going to when choosing which option to buy, I like to kind of see um, how much of movement can I get. In here today, it went up by 2% already, right? It went up by 2% already, and the movement was $3.50. I'd like to catch this when it comes down to here, 180. So it will go down to 180 and possibly purchase it at the strike price of 180. Um, I'm going to buy, let's say, mm, 5 contracts, and I'm going to pay, sorry, it's not doing, something's not right. Tesla option, strike price here. I'm going to enter 5 contracts, limit price of 2.6. So that's $1,300. Okay. Now I'm just gonna wait it comes down. Now it's 2.5, 2.7. It's going to come down, going to come down, down more. Come on, come on, come on. Down, down, down. So this is down, down, down. Down, down, down. Come on, come on, come on. It's trying to reach the price that I want, but it looks like because of the volatility, the option premiums are going up. I'm just gonna enter at 2.8. Okay, because the reason why I rushed to go in is because the stock price here, it's reaching the point that I want, right? It's reaching the point that I want, and now it's bouncing back up. So because although the option prices were not going down as expected as the stock prices were coming down, um, I knew that when the stock hits this price, it's going to bounce back up, which is why I rushed to buy the contracts when it hit the price that I wanted, and now it's going back up. Now, let's see how much this is. Now it's 2.9. So, where did it go? Oh, shoot. Hold on. Where did the option go? Oh, okay. So the option actually moved to an account um, that I have, a different account that I have, my main trading account. But let me show you this. So the option that we bought, so the option that we bought went up $130, $130 in less than 2 minutes. Yeah, it's 305 because we got the movement. So we got the stock from this price and then it's going up. I'm going to hold this option for, I don't know, a while for today until I see a reversal from coming down because I see that this is in the uptrend. And same thing goes to Netflix. Now I see Netflix, the price start to go up again. Um, it was going down, now it's going back up, right? So I'm going to enter, same thing. I'm going to enter Netflix. Netflix options, and I'm going to go. So, as you can see, all I'm doing is literally just looking at the patterns and try to um, buy the calls when it's low. I haven't tried buying the puts yet because I don't see any downtrend, like firm downtrend here. But when the Netflix comes down to 666, I missed a chance because when it was going up and down, I should have bought at 668, but now it's going back up. I don't want to get into, I don't want to buy a top because it's going to go down again, but I also don't want to buy puts because it's in the uptrend. So I'm just waiting for a good entry position for Netflix. For GME, it looks like they found the floor at 28.4. It's bouncing back up from this point now, one, two, three, four times now. So if it can hold here, I'm going to enter GME call options um, to see how far it can go up. Okay. Okay, I'm looking at Netflix. I'm going to aim for Netflix option for the strike price of 675 for this week expiry. The reason is $5 move from here, $5 move from 670. So right now it's almost 670, right? 670 is only about 1% move. So if the stock moves up 1% from where it is now, I'll be able to actually make money. So I'm going to buy. Oh, now it keeps going up. There's nothing I can do because it keeps going up. Here, Tesla, it's in the uptrend, but the selling pressure is also very high. You see the big candles coming down, big candles coming down. Yeah, the selling pressure is also very high. I'm going to take a look. I'm going to wait until how it folds out, like either it confirms downward or upward. Mainly because this is for educational purposes. I'm not doing this trade to make money now. I can always make money in the afternoon or later after I turn off the live stream. This is just to show you how I make the decisions to buy or sell stocks or options. Yeah. Now, Netflix continues to go up, and we missed the boat because I was waiting for 668. I couldn't enter because it kept on going up. Now it's going up higher and higher. I'll wait until it goes to 672. 672 now. I'm gonna wait until it comes down. continues to go up. Oh, look at this big candle. Look at this big candle. Okay. Oh, it's being suppressed. A lot of selling pressure. Oh, look at that. Look at that. A lot of selling pressure here. Trying to break that the floor 28.5 that he had. And it did. It went down by, I don't know, like almost 30 cents, 50 cents. So this is just a waiting game like now. Okay. While we were waiting, my option price changed for Tesla. The price of the stock is moving upward a little bit, so I'm making money, $45. But I have to remember that I actually paid um, commissions to buy the stock. I buy the options, and I have to pay commissions when I sell the options too. So from this trade, if I make $100, I'll be making roughly, if I make $140, for example, I'll be making roughly about 10% of what I paid. Yeah. Oh, look at that. Look at that. It's on the move. It's on the move. So now I'm going to get ready for Netflix options because it's coming down, right? I'm going to buy calls. Okay. I don't know how far it will go down to, but I'll try to catch it. 668. Yeah, 668 is a good spot. Tesla is trying to break um, the ceiling, which is 181.4, but it's having a very difficult time. But I see there are a lot of buying pressure at the same time, a lot of selling pressure, but it keeps going up higher and higher. So let's see. I'm going to set the sale price. So now, when I choose, like, how do I know when I need to sell? Um, so usually I look at it as how much money that I make versus how much money I put in. For options, for options, any money made is good. If you don't lose money, it's good. But I have certain expectation going in. So for example, in Tesla's case, um, if the stock, because the stock is very volatile, right now, Tesla stock is very volatile, right? So today, the stock went up by 2%. Yeah. For this stock, 2% move is nothing. 2% move is nothing. Um, what I'm expecting is if there's a movement of, let's say, another 1% for today, another extra 1% for today, I'll be happy. So 181.43 minus the stock price went up by 3.33. Okay. So this was the stock price that it opened the market with. What I'll do is I'm going to multiply this by 0.03. So this is a 3% move minus 3.33. So if the movement, if the stock goes up by additional $2, I think that would be the maximum that it can move for today, like expected move. Okay. So I'm going to set this option, sale price at according to wait at the price that I think it will move to, which is extra $2. I'm going to set the price at $4. Okay. So if I set the price at $4, I bought this option. I bought this option when it was 2.79. Yeah. If I sell it at $4 and I bought this for 2.79 multiplied by I bought 5 contracts, so $500. It's $605 profit if the option price goes to $4. Yeah. So if the stock moves 1% up, I'll be making $600. And how much did I put in? 1400 divided by 1400. So that's 43% return in one day. Which is not bad, which is really good because like unless you go to the casino, I don't think you can find any place that you can make the 43% in one day, right? Okay. I think it will continue to go up. The selling pressure has decreased. It was going down like this. The floor is getting higher. I'm in a very comfortable position now because the stock is continuing to move. And for GME, like I predicted, it continues to go down because lower floor is getting lower and lower. A lot of selling pressure here, a lot of selling pressure. It might turn around, I don't know. But as for now, the pattern itself is like that. Yeah. Here, same thing. Netflix, it couldn't crack 672. Um, I don't know if it will sell at 672. I don't know if the range today is 672 to 666. Um, but it looks like it couldn't crack 672. It will come down, but it will go back and try again. But we'll see. Depending on what kind of move it shows me, I'll choose the side. Now, Tesla is trying to crack this 181, but it's having a very difficult time. This is where I kind of debate because this is 1 minute, right? And I really want to do short-term trading. My goal is to make quick money, make quick money. Yeah. Oh, now it's going up. Oh, it broke the ceiling. Okay. So now my Tesla is making $200 off of the initial investment that I did. Oh, it continues to go up. Wow. Okay. Now it's making $300. I set the price up at $4. Yeah. Right now, the option price is so right now the option price is 3.4. We are 50 cents away, 50 cents away from hitting the $4 target. Um, I would always advise to change the limit price or change the price that you want to sell at any point um, if you don't feel comfortable, if you don't feel confident. It's okay. You have plenty of chances. You have plenty of entry options, entry points. I just chose $4 because I felt like it. Now it's going back down. Now it's going back down. I don't know how far it's going to go down to, but if it goes down, possibly it will go down to about here before it bounces again. But still, I set the price up at $4. So I'm just gonna wait patiently until it hits $4. Yeah. Uh, back to Netflix. Back to Netflix. It's trying to crack the 672 for some time now. Let's see. Let's see. So this is just like a waiting game Just waiting game. Okay. Let's let's see. Oh. While we wait, um, there's one thing that I wanted to show you. There's something called cover call. Let me cover call. What is a cover call? Um, Cover call is you are becoming the market maker. You are selling the call options to the market. Writing options. Writing call options uh, to sell in the market. To sell to the market. You become the market maker. Okay. The reason why I say writing call options sell to the market is a cover call strategy is a good option is because look, right now Netflix is hitting 672, but you are not too sure whether this price will continue to hold up and continue to go up or it's going to go down like GME. So you want some sort of assurance and profit at the same time. Okay. So if I were to, so same thing, I'm going to use the same example. If I were to write this call option, I'll be making $115 of $115 USD and but this is not a good example. Let me go with something more expensive. Okay. How about something more expensive? So I'm going to choose Netflix. Right now, the stock price is 672, so I'm going to choose. So let's say right now the stock price is 672 and the call option itself, the market price roughly 870. In that case, if I were to sell 870 and I own 100 shares of Netflix, it's $870 in premium per contract. Okay. And how much it's related to is 672.5. Oh, no, wait. 8.7 divided by 672.5. That's 1.3% return. Okay, 1.3% return in 1 week. Uh, if, mm, but the ceiling Okay, so if you buy 100 Netflix shares now, and then um, you sell, let's say, one contract. So you bought 100 shares, and then you wrote call options, you sold it in the market. Then um, your, what was it? Sorry, sorry, I'm just trying to see. Okay, let me rephrase it. Let me rephrase it. Okay. So you bought 100 shares of Netflix, but you see the movement and you kind of feel like, you know what, I don't know where it's going to go, but I want to collect the option premium prices. Okay, sure, sounds good. You can buy 100 shares of Netflix and write call options. You sell it. Then you collect $870 in premium per contract. So that's 1.3% return 1 week. And we have um, how many weeks do we have? 52 weeks. So that's multiplied by 52. You're looking at mm, a possible return of 52 multiplied by 1.3. That's a possible return. Okay. But if so this is when this is if the stock prices continues to go up. Okay. The stock can go up 50%, 60%, whatever, but your maximum possible max payout is 1.3% every week, which is 68%. If stock prices fall, then you can use the premium to cover the loss, the unrealized loss. And so you're okay to lose up to 1.3% um, because you already collected the premium. Okay, so even when you think the stock prices are going to go down, you can also use the cover call to kind of hedge your position to lose lesser money. Okay. Let's look at because GME is very volatile, like it was $29 and now it's 27 something. I'm going to show you how you can actually make money off of GME trading options. Okay, uh, okay, in here, right now, the stock price is 27 point something, and the option price for call at that strike price here, 27.28 is 2.4. Okay. 2.4 divided by 27.82 is equivalent to 8.6%. That means you're getting if you buy the stock right now and if you sell the call options, if the stock prices remain above $28, you will be collecting 8.6% return in just 1 week. And if you multiply this by 52, so let's say you do this throughout the whole week, and if the option prices remain very similar to what it is now, you will be collecting 448% of return by just selling the options, the cover call options. Okay. Okay, now Tesla is moving up, moving up, moving up. Come on, come on, come on. So this, I believe, cover call is an effective way. This is effective way to hedge your current stock position and make stable Ooh, I think it just hit. It might hit $4 very soon. Um, did it hit four? Did it hit four? Oh, it's 3.9. Almost, almost, almost. One more push. Come on, one more push. One more push. Okay, I'm going to just. Oh, 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 it's at $4. Oh, oh, oh. No, 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 no. It's almost there. It's at $4 now. $4 now. Okay, it failed. So I just hit my target of reaching $4. Okay. It doesn't matter now. It can continue to go up, continue to go down. I don't care. I already made the money. So it went from here to here, right? It failed. So now I'm going to capture this and let's do profit analysis. Oh, okay. June 17th, 2024. Profit analysis. Usually I use Excel. It's easier. You don't have to have like um, you don't have to have any background in Excel. All you have to do just buy price and sell price. And this is the um, number of stocks, which is in our case we bought five contract. We traded five contracts, right? So we bought at 2.79. We sold at 4. PL, profit or loss, is this minus this multiplied by 500. So our profit loss is 605. And how much did we put in? I write it as how much risked. Our book value here is this. And then I write return divided by this. So our return for today is $43 off of whatever we put in. And I made 605. Um, and that's it. If I make 605 for one day, I'll be happy. I don't care. If I can continue doing this, then um, there are 5 days in a year, 52 weeks. If I can continue doing this, then I can make $157,000 a year, which is not too bad, which is pretty good. Everybody should have their expectations set on how much money that you want to make in a day. Because I can continue doing this trade today, it doesn't mean that I will win every single trade. So I have to I have to manage my expectations. Also, I have to look at realistically, um, how much money would I be satisfied per day? I say per day because if you say per month, per week, or whatever, you it's kind of a long shot because we are doing day trading. I want to make sure that we expect management, our expectations, um, so that you know how much money you want to get per day from trading. And once you hit that money, you stop. You don't do any more trades. You just stop. The market opens every single day. Every day there are volatile stocks. Every day there are stocks that are worth doing or trading options. So there's no way to trade anymore. Like I made money. I'm leaving. That's how I do. Usually the stock market is the most active from open, which is 9:30 until 10:30. So that's when you stop. We stop 10:30. We made money. We're out. Okay? Alrighty. Now, if I look at if I look at the option price now, oh, option price now is $4.60. So we could have waited for additional 60 cents, but I sold it. I don't care. I made money. Okay. So this is the kind of mindset that you should have. You don't know where the bottom is. You don't know where the top is, but you should be satisfied with certain level of return and you stick to it. Okay. Um, I could have done, you know, mm, I could have done 10 times more because for me, I'll say, the risk tolerance is higher. So I could have put in, $14,000. Okay, something's not right. Okay. If I spent $14,000, I usually do. For me, buying options 10,000, 20,000 is not much of a big deal. Usually, if I do it, my profit or loss should have been like 6,000. So for some people, they say if you make 6,000, hey, look, it's it's somebody's monthly salary. For me, it's just like it's one of those trades. It's one of those trades. Let me show you. Let me show you what I did um, last Friday. Okay, this is last Friday. So these were all my trades last Friday. Okay, so I bought. Oh shit. Okay, I'm going to delete this. Okay, I'm just gonna write PL. Mm, So for stocks number, how much I bought. So in here, I started by this trade first. Yeah. So this is the number of contract. Okay. So I bought for 1.5 and I sold at 1.95. Number of stocks, 10,000. So the very first trade I made 4,500. The second one, uh, I believe if you add all this, it will come out to be 300. Okay, let's do the math. Uh, 1 plus 1 plus 8 plus 29. So I'm just adding all the number of shares to make sure they add up. 40 plus 40 plus 58 plus 63 plus 100. Yep, 300. So if I add all this, it will add up to be 300. Okay, so I'm going to do weighted average, which is 0 0.4. Oh, sold. Okay. 0 0.4 multiplied by 100 plus 1.1 multiplied by 63 plus 1.9 multiplied by 58 plus 1.45 multiplied by 40. So I'm just doing the weighted average. So I'm multiplying the sold price multiplied by the number of options that I bought, and then I'm going to divide it by the number of options that I bought. Okay. 1.0 multiplied by 29 plus 1.2 multiplied by 8 plus 1 multiplied by 1.6 plus 1 multiplied by 1.5. And then I'm going to divide by 300. Okay. So this is the weighted average of the sale price. Okay. How much I bought? I bought 100 share. Oh, I bought 1.1 multiplied by 100 plus 0, 0.85 multiplied by 100 plus 0.6 multiplied by 100. Okay. Oh, divided by 300. Okay. So this is how much I bought. Number of stocks, 30,000. My PL is this. So if I do net, so last Friday alone, I made $10,000 from trading options. So $11,000 trading options for Netflix just for one day. This is the type of risk tolerance that I have. Like to me, a few $1,000s are meaningless because look at the amount of premiums that I paid to make this money. Mm, 20,000, 15,000, 10,000, 10,000, 10,000, in total 30,000. Yeah. Okay. All right. So that's it for today. That's it for today. Oh, it'll continue to go up. Tesla continues to go up. Now the option price is at $5. Okay. So I'm done. Today, I'm gonna be shutting down the live stream. We'll see you tomorrow. Okay. All right. Bye bye.